Okay, in today's video, we're going to talk about mortgage reserves. So if you've been asked to provide mortgage reserves or you just want to know what those are, stay tuned. Hey, what's going on? This is Channing Moore, the broker owner of Bayou Mortgage. And like I said, in today's video, we're going to talk about mortgage reserves and what they are and why they're important to the application process. So what a mortgage reserve is it's simply 1 month of your mortgage payment. Now, remember, if you've watched other videos, which I'll link here, that describes your mortgage payment, then you know that your mortgage payment is not just the amount that you're paying back to the bank. It's not just your principal and interest. Your mortgage payment is comprised of your principal and interest plus your taxes and insurance. So if you have property taxes, which you probably do, insurance, flood insurance, or any of those things, then you're going to have all of that into your mortgage payment. And so that payment, let's say it's $1,200 a month, is what's considered a mortgage reserve. That's 1 month of a mortgage reserve. Now, what you're likely going to see when you're asked for this is either you're going to need to provide 1 month or 3 months of mortgage reserves. Very rarely will it be more than that unless that's the only way that your application can get approved. And so what you're going to see is if you need to do a manual underwrite because you don't pass the automated underwriting system, then your loan officer or your mortgage lender is going to ask you for if you have mortgage reserves. Now, loans like VA and FHA sometimes only require 1 month's mortgage reserve. It kind of depends on the lender. But a lot of times you may be asked to provide 3 months of mortgage reserves. And if you're going to do a manual underwritten USDA loan, which is a loan for people buying a home in a rural area that doesn't require a down payment, one thing that's really important to know about the mortgage reserve, though, is that you don't actually have to spend this money. So it's not money that they're going to require from you at closing. It's not money they're going to ask you to pay as part of your closing cost or your down payment. It's simply what it is a reserve. It's to show the bank that you have money in your savings account, in your 401k or retirement account, basically anything that's not cash, and it has to be your money, so somebody can't give it to you. Money that you have in the event that something bad happens and you can't make your mortgage payment, you're showing them documented evidence that you had reserves available should the worst happen. So again, it's not money you have to pay at closing. That's why a lot of times people will use their retirement account or their 401k account, even if you don't have that much in your savings account, because we're not asking you to give us the money. We're only asking you to prove that you have it. So I hope that explains mortgage reserves and kind of what that means. If you have any questions about that, as always, you can ask me. If you're watching this on YouTube, I definitely would appreciate it if you liked, shared, even commented on this video. So again, I'm Channing Moore with Bayou Mortgage. I'll talk to you soon.